trading at its best.
Okay, welcome everybody to this week's webinar. Just want to do a quick sound check and make sure you guys can use the chat box. Just type in a Y if everything sounds okay. Okay, looks like we've got a bunch of yeses, so I think we're good. Okay, so how many of you this is the first time coming to one of these weekly webinars? We do these every Friday at the same time at 2 p.m. Eastern. How many of you, this is your first time coming to one of these? Okay, I got a couple first-timers. So let me just explain here kind of the way we do things is we post the blog update. We trying to do it midweek. The last two have been a little later. We've been doing them the day before, so usually Thursday. But we want to try to get those blog updates out in the middle of the week so you can see the topic we're going to be covering. We give a little summary, and then we do the webinar, and we'll go in and go over some examples and answer some questions. And so that's what we'll be doing here today. We usually go for around an hour, and sometimes it might be less, sometimes it might be more, depending on what we're covering. Okay, so let's take a look at what we're doing here today. And for those of you that don't know me, I am Mike Swanson, and founder of TradeWest Forex and momentous, Pipstyle, all of the tools we've created. And we'll talk maybe a little bit about momentous today as well. But mainly we're going to be talking about the technical indicators. Which technical indicators work best? Is there anybody that did not get a chance to read the blog post? We sent out an email last night and updated that blog post, and we kind of give a little summary, like I say, of what we're going to be doing today. Is there anybody that's not been able to see the blog posts? Just kind of want to see if everybody's getting the information we're sending out. Okay, if you did not get it, maybe later you can check your email, see if you actually received the email or not. Some of you saying a couple no's. Okay. So maybe if you can check the email, if you don't see it, maybe come back, type in your email, and we can make sure you're getting those updates. But anyways, let's go ahead. What we're going to be talking about today is I always see a lot of traders just packing their charts full of technical indicators, and a lot of people think that the more indicators you have, the more confirmation you'll have for the trade, and that the better it should be. When actually it's kind of the opposite. If you have too many indicators on your charts, what happens is you get more and more of a delay or a lag on the trade. So by the time all of your indicators would line up, it's too late, the market's already moved. So I'm going to show you some technical indicators that I use, and I don't usually use them on their own. That's the other thing. I actually have my own strategies I use with them, such as momentous. But we will I'll show you how you can use different strategies with these indicators as well. So let's do this. Let me bring up some charts here. And we will start to take a look at these things. Yeah, it's fine if you didn't read the article. The blog post. I just want to see where everybody's at. We're going to cover the same thing and more in this webinar here today. Okay, so let's just bring up a pound. I'm going to bring up a pound hourly chart here. So you guys should be able to see the chart now. And I'm going to go to the indicators, and you'll see there is a lot of indicators available. And MetaTrader actually has less than others that I've seen. And but of course, you can download more. You can put all kinds of stuff in MetaTrader. And there's just a lot of stuff that's, a lot of it's very similar, and sometimes you'll be using, like, for example, the CCI, Commodity Channel Index, and then you could be looking at a moving average, and a lot of it is the same thing. So same thing with a lot of the oscillators, like the stochastic, MACD, MACD, RSI. A lot of them are just very similar indicators. So, but the main thing I want to show you is sometimes I'll use other things that we're not going to talk about a lot today, like Bollinger Bands, but very rarely. I mean, there's only two indicators that I really pay a lot of attention to, and the first one we're going to talk about is moving averages, and I'm going to show you the way that most traders use them that's not very effective, and then I'll show you the way I use them. So what most people using moving averages are doing is taking, like, say, the 5-period EMA, exponential moving average, and this could be simple or exponential. It's just the way they calculate it, and then maybe they'll put like a 20 or something. This is a popular combination. Maybe change the color so they can tell the difference. 20 EMA, and what they're doing is looking for the crossover. They say when that red line crosses over the blue, I sell. When it crosses over the blue to the upside, I buy. This is not the best way to use moving averages. That's not really the way they were designed. Now, it looks like this is the best way to do it because you'll see, like, this crossover here, and you see this big move. However, that crossover did not appear until way into this move. And a lot of these are faults, too. There's a lot of times it crosses over, then crosses back. So intra-bar movements can make these look false. And besides that, when the market starts to go flat and choppy, you'll get all kinds of whipsaws and false crossovers. So that's not what we want to be using moving averages for. Instead, what I've found, the best way to use the moving averages is for support and resistance. So what I would like to use is a 200 period, and I can use this for support and resistance, and also trend direction for the 200, since it's a long period moving average. And I'll set that to the EMA 200 on the close. I'll make it a little thicker line red so I can see. And then if I zoom out on my chart, I can tell that if price is above this level, the market's in an uptrend, and I don't want to try to sell against the market. You'll see there was very few opportunities in that big move where you could have survived and made a little profit, but it would have been very tough. Whereas buying, pretty much anywhere in here that you bought, you should have been able to make money. And then the same thing when it's on the opposite side. As the market's moving below it, I only want to be a seller trade. I only want to be going short. So when it's below it, you'll see if I tried to buy, there was very little room and opportunity to try to buy in here. Instead, selling, I should have been able to make money on any of those swings. So then that's what I use for trend direction, and also I sometimes like to look at it as support and resistance. If the market comes up right here and is really fighting, I will be careful and probably not take a trade until it clears it and gets back in a trend direction. You'll see a lot of times it uses that 200 EMA as a support, and the market likes to test that area and hover around it. Now, there's another moving average I like to put on here for the support, mainly for the support and resistance, not so much for the trend, and it'd be the 34 EMA. And you can do whatever colors you want and thicknesses, but you can do something like that. And now what I'll use this for is once I'm above the red line, the trend 200 EMA, the trend is up, I only want to be a buyer. So let me show you how this would work. Once the market's above the 200 and it pulls back to the 34, that's what I'm looking for. So that's what I'm looking at for my either my entry or my confirmation of another strategy to enter my trade. So it'd be right there, right on the dot almost. That was a great place to buy the pullback. We don't try to buy the initial move in the crossover because it could easily flop back. But once it's cleared it, it's above it, and then pulls back to that 34, the market will bounce and go up. So this has been the best way I've seen to use moving averages, not the crossover or anything else like that. And you can see that over here again it pulls back to that 34 right there on the dot, hovers around for a while, then bounces back up. Hovers around, bounces up a bit. And then when it starts to flip back and forth a bunch, then I know that the market's making its way back to the 200. And if you go to the short side, we can look at that same thing there. Let's see here. Here we go. Once it's below that red line, the 200, and it pulls back right there, that's where I would look to, I might use this as a way of adding to my position if I'm already short. I might use it as a way to, confirm an entry on another trading signal. Maybe I got a signal to sell. Maybe, even if momentous or another system said to sell right here, rather than selling there and going through this drawdown, I would wait for the pullback and then sell here and catch the better move down with use a smaller stop and things like that. Okay, so that's very easy to follow, easy to use system, and it's not really a strategy, like I say, by itself. And you could try to use it that way, but you're going to find you're going to have to do some more filtering because it's not really designed to be an all-in-one system, and you're going to have to still figure out where to put stops and targets and things like that. But as far as if you're about to take a trade and you see that it's crossing over the 200 and you've got a signal telling you to sell right here, if you got a signal telling you to sell there and you're looking at these indicators, you would know you should probably wait and see what happens. And instead, when it pulls back here, you could look to buy off that 34 on the way back up. So just a quick, easy little thing to throw on your charts. And as far as technical indicators, that's a really good way to use technical indicators. Now, there is one other indicator I like to use, and it is the RSI, Relative Strength Index. And you can find that in most all platforms come with these indicators. So you can attach RSI, and the period I usually don't mess with the period too much. I pretty much can just use the default. It kind of just depends on how much of a swing I'm really looking for. If I'm looking for a short-term little quick swing trade, then I might lower this number. If it's more of a longer term, I'll increase it. But if I want to be somewhere in the middle, I'll probably just go with the default of the 14. And you'll see that puts a little oscillator on your chart. Now, the way that most people use this indicator is for finding strength in the trend. And what it's supposed to be is if it's above 70, this little dotted line, you've got a strong trend developing. If we zoom out, you can see here's where it hit 70, strong uptrend started to develop, and downtrend it hits below 30. Now the problem is there's too many false signals with that, and also it's pretty delayed. So I'll show you the way I use it. That's the typical way that traders use RSI. I'm going to show you a completely different way of using this indicator, and you can use this with the MACD, stochastics, RSI, anything. Any kind of oscillator like that will work. And what we're going to do is we're going to look for what we call a divergence. Okay, is anybody not familiar, has not heard of a divergence before? And you guys can just use the chat. The divergence is actually, it sounds confusing and it might look confusing at first, but it's actually pretty easy the way I'm going to show you it here. All you have to do is look at when the price is going the opposite direction of the oscillator. Okay, so you can see normally, usually the price and indicator go the same direction. Okay, if the indicator is moving up like it is here, price is moving up, right? Indicator goes down, price goes down. That's the typical way it should work. It should follow it. But there's going to be cases where it stops following it, and I don't know, somebody said the chart broke up. Might be because of that drawing tool. Let's see, let me try clearing it. Okay, so there's going to be times when price stops following the market, and that's when you want to react. And let me show you, here's one right here. Okay, so indicator moving up, starting to roll over, it's following price. Price moving up, rolls over, moves down. Now here's where we see the difference. It's when price, when it goes to make a lower low, when the indicator makes a lower low, it's when it doesn't follow it. So see here, here's our low. Here's our low in price. Indicator made a lower low, right? Price did not. It made a higher low. That's the opposite. You see this? One's moving lower, one moves higher. When that happens, that's a divergence signal telling us that the market is going to find support here and bounce back up. Now, some people look at a divergence as you always follow the direction the indicator is going, and in that case, you know, this one wouldn't be valid. They might call this a convergence instead. But either way, it doesn't matter how you look at it. Sometimes one way is working better than the other, but I kind of will look for both. So sometimes, you know, price might go lower. So if price went lower here and indicator went higher, if that happened, then the same thing. I'd still be a buyer, but I'd be following the direction the indicator is going. So let me give you some more examples. Basically, when that happened right there, that's time to buy, if you didn't follow that. This right here, these points are higher, these points are lower. As soon as that confirms and it starts to turn up, you know, at the close of that bar, right in here is when you look to buy. Or use, like I say, as a confirmation. If your system was saying to buy up here and you wanted to wait, you could get a better entry here or add to your entry when this divergence shows up. Or if you see this divergence and you've got your system telling you to sell right here, you should, you know, probably not sell. You should wait and see what happens. And clearly this market moved up. Okay. We've also got a guy here saying that there is a divergence more to the left, and I can see that as well. Let me go back to right here. Here's the market making, you know, following the indicator at first there for a bit, but then the price made a lower low. This is the divergence where it actually follows the indicator. Okay, it made a slightly higher low. So you want to follow the indicator and buy on the way up on a divergence. On the convergence, you're going to go against the indicator. Okay, so there's a buy signal again, right at the bottom. See, this stuff is much better than the RSI telling you wait till it's above 70 to buy, because it's not delayed. See, we would have been a buyer right in here, whereas it didn't cross over 70 till right here, way up here, way too late. Just like with moving average crossovers, they take too long. So you want to be using these indicators a little bit differently. You know, sometimes all it takes is a little slightly different way of analyzing things to have an edge against everybody else. And so those are some ways you can use some technical indicators successfully. Now let's look at a few more examples, just so this all sinks in. You know, looking at one or two might not be enough. Let's look at the sell side, where you're looking to sell against the market. Of course, I want to be below that 200, and we'll look for here's a convergence. Okay, here's where the price is making lower high. Indicator made a slightly higher high. And so, actually, yeah, this one is this is the divergence where you follow the indicator on the way down. But it's like I said, there's some different confusion out there. Some people call it convergence. Some people call it all divergence. Some people would say this is not divergence at all. But like I say, this is the way I look at it. I go basically the opposite direction price. I always go the opposite direction of price, recent movement. So if I'm drawing on the top of the highs, I'm always looking to sell. After this movement moves up, I'm always looking to sell it back down. And so I don't really pay attention to any of that. I look at if it's doing the opposite of the indicator and I'm drawing on the highs, I will sell. If I'm drawing on the lows, I will buy. That's the easy way to understand this. Let's back up and see if we can find some more here. Okay, here's another one. Here's the price making a lower high, while the indicator was making higher highs. And once it does that, I'm looking to sell because I'm drawing on the highs. If I'm analyzing highs, I want to sell. If I'm analyzing the lows, I'm looking to buy. So anytime you're below that 200 or the trend direction, you're only going to be looking at the highs for divergences. So there's another one there. And this one did fade out. It kind of gave you a little bit of movement, but then it went flat. It's not going to be perfect. That's why, again, you don't want to use this by itself as your trading strategy. It's much better used as a way of exiting, scaling in, or filtering potential trades with your own strategies. And let's see. Maybe we can show one more example, and then what I'm going to do is show you how to use it with a strategy such as momentous. Let's go back here. We could look at other pairs and time frames too. This works on, I'm on the hourly. I could go up to the daily, or I could go down to the 15-minute. You will find with this approach that there are going to be more significant signals, especially from like the divergence on the higher time frames. The lower time frames, you might find divergences that don't really last as long. The probability might be a little bit lower. But again, we're just using it as a filter or a secondary indicator. Okay, let's see. Let's see. So if you get above the, nothing happened above it there. Here's a little one here. Here's the market making lower highs, higher highs on the indicator. Indicator turns down, price turns down. So you're selling right in here. Capture that little move, or use it as, like I say, confirmation or exit, but knowing that the market's turning. Okay, so I think all that should make sense. It's really, it's easy for me. If you're confused, you might have to review it a few times. The moving average part is really straightforward. Above the 200, trend is up. Below it, trend is down. Only sell in a downtrend, only buy in the uptrend. Now there's strategies I'll use where I'll go against it, but that's a more advanced approach. You really are going to see a higher consistency when you trade with the direction of that overall trend. And when I show you momentous here in a second, we've actually got part of our star system that we use to filter trades. Part of it is using this 200 EMA as a trend direction to filter trades. And I can show you this actually. Let's just jump on here and let's put momentous on here. Okay. So with momentous on here, we can see I've got these 3- and 4-star trades. Now if I put the 200 EMA back on here, all these trades are short because we're below the 200 EMA. That's the requirement, I think, for our 3-star. I'd have to double check on that. Now if I go into my settings on and change this to 1-star, 1-star minimum rating, I will now see both buy and sell trades. And you'll see there was a couple losses, there were 2 losses up here that didn't need to be because they were against the trend. But if I change it back, it will filter that and give me different signals now that I'm only looking for trades below that. And that's just part of the rules. There's a couple different things we do in each star part of the system to determine the higher probability trades with more stars. But anyways, you can see, like I say, I use this stuff myself, and it's pretty effective when you use it with another strategy, whether it's momentous or not. Let me just show you now. Let's see. Let's jump up to like the 4-hour. Okay. Here's some buy trades that picked up. There's probably one right here. We're just not seeing it because it's only showing us so many bars of signals. But I'm pretty sure there was a buy trade over here that we would have seen as well. But again, it's staying above that 200. If you tried to sell in any of these little moves, it would have been tough because there wasn't a lot of opportunity. Whereas when you buy, there's all these movements. Let me show you. Actually, I've got some trades still open right now on the pound Australia. Let's grab that pair. Okay, this one's a really good example. if I could show you more signals on the chart, it's been buying all of this move up, all the way up. And we just picked up 180 pips on the daily chart. Let's go to the daily. We just picked up this move right here for 180. It was up 203, but we bought that move, hit target 2, making a good profit. There's one right here, went up as high as 425 pips. This one here hit fourth target at 433. And see, we're only buying when we're above that 200. We wouldn't sell any of these. There's no profit to sell. Right here, I mean, if you try to sell right there, that would have been tough to make money on it, or right here even. And that's why if you just stick to above that 200, you'll do a lot better with your strategies. Someone's asking, can you backtest with Momentix? Because of how complex the calculations are for this system, because it's kind of an artificial intelligence system that it has all internal input, there's no inputs. It takes a lot of processing power if I was to try to show you more than just a few boxes. So we had to restrict it. That's why it only shows a few at a time, where we've spent a lot of time processing data on servers and getting back-tested results. We do have those. We're working on actually releasing our Trade Finder page to our members. And I can probably show you guys one of the performance pages just so you can see what we're working on. Give me just a second. I'll bring that up for you guys. Okay, so right now we're working with 6 major pairs and 4 currency time frames, but we're going to look to add more. Right now we're just finishing some testing before we release it to our members. But let me just bring up. I'm just going to bring up like the pound hourly on here. Let me go ahead and show you guys. Give me 1 second while I pull this up. Okay, here we go. So someone was asking about these backtesting with Momentix. Like I say, what we've done is compiled 5 years of data and signals and got it into a web page that we're looking to release soon with all the different currency pairs and time frames. But you can scroll back. This is a really cool little feature. You can go back and look at the big picture for the last 5 years, see the whole thing. This is the pip gains. And below that, there's thousands of trades that you can look over and see the results. There's times in here, like right there, where you're winning 6, 7, 8, 10 trades in a row, and there's other times where you're losing a couple. The good thing is the risk-to-reward ratio of Momentix is really good. I mean, you're hitting 83 pip profit, and you're only losing 25, 17. So that's one nice thing about Momentix. But anyways, we'll be releasing this soon. You can see the stars. You can see all this information. But those of you that have attended our past weekly webinars, or if you've went back in and watched the replays, I've stressed a lot about the importance of looking at systems on a long-term basis. I mean, this is 5 years. This is pretty long-term, and it looks great. And if you guys remember, those of you that have seen the past session where we talked about the top 3 trading mistakes, we talked about giving up on a system too soon or judging it in a short period of time and not looking at the big picture. Well, this now allows us to do that, to look at that short-term picture and kind of see what you can expect. If you see this right here, I'm just kind of zooming it down. If you were looking at the strategy right here, this doesn't look very good. This is just the results from pound dollar only for about a month. It was in January 2010. So if you're watching the strategy right here, it's going downhill. You're probably thinking something's wrong with the strategy. A lot of you would have been giving up already after a month of going down, right? Well, if you looked at the past, it was great. The performance was up. So some of you might stick around, but if it's too big of a drawdown, a lot of you would give up and move on. So this gives us a really good way of seeing that after that period, things get back on track. You have to just be patient. And that's with any strategy. I mean, if there's a strategy you're using right now, try to go back and do this. Go back and look at don't just look at this. Don't go back and be like, okay, yeah, this is a great system. You need to zoom in. You need to see what the drawdowns are going to look like, and if you're going to be able to be patient during them. Look at this period right in here. Let me zoom in. This is a really, there's a really long period in here where it was growing but kind of slower than usual for a couple months. If you can't hold on during those times, you're going to miss out on the big move coming. See that? So this is a really cool thing that our web guy was able to get in and make available. We're going to be making available soon. He made it so you can zoom in and see both the big picture and the short term, and see what's going on and what you can kind of expect. If you look up here right now, what's going on lately, the last month or so, it's been really good, but we've had kind of some slowness all of a sudden. That's normal, as I've shown you. So anyways, I didn't want to go off on that tangent too much, but I just wanted to show you guys that. That's something we're looking to release here soon, and we've got more data. There's a whole bunch of different pairs and time frames you'll be able to look at. But let me close that back down. So let's see. This session, what we taught today was actually pretty simple, easy stuff, but very effective. I know, especially, like I say, with Momentix, because we've done test results on 1- and 2-star trades. I think the 1-star trade does not use the 200 at all, and there's quite a big difference in making sure your trades are in that direction of the trend. Okay, now those of you, how many of you have never heard of Momentix before? Some of you said this is the first time coming to one of our weekly webinars. How about Momentix? Is there anybody who has not seen Momentix before? Oh, we got somebody here. Marcus, Charles, Bill. A couple of you have never seen it before. Well, here's what I'm going to be able to do. I'm going to give you guys a link that you can actually download and try it out, and use it. Use it. Watch it with this 200 EMA. Watch it for yourself. Try it out, and see what you think. The system's pretty easy to follow. I'm going to give you a link that will also have a training video on there you can watch. But the link is just TradeWestForex.com/Momentix. So I will post that link. And that'll let you download it right away there. Okay, so there's the link. So download Momentix here, TradeWestForex.com/Momentix. And you can get that down. This is a strategy that I've developed based on my experience trading with banks and a mathematical approach to, just like we use with PipStat. And you can play with that tool. The markets are closing up here soon, but you can still get it on some charts. Now, I would suggest you trade it really on the 30-minute and up. If you trade on less than the 30-minute, you're going to have really tight spreads and be very fast at getting in. But anyways, there's other strategies you can use what I've taught today with. It's just Momentix is one that has everything built in. We have the stops, the targets, the entry, the risk-to-reward ratio, the probabilities, and everything. So I figured you guys could try that out. There's other systems that use, support and resistance breakouts. I can show you that. Let's just go back over here a little bit. I can show you that the same thing with support and resistance breakouts. Watch the divergence. Let's see, do I still got a chart up? Let's watch the RSI on a breakout. Let me give you another little tip here. Okay, so let's say you are about to trade a breakout in the market. Let's see if I can spot one here. Okay, here you go. This is, I don't know if it quite broke there. It was really close. We could look at it this way, though. I don't know. So let's find a really clear one. Sorry, I'm just want to make sure this comes across very simply, and need a really good example for that. I mean, there's plenty of trades in here I could spot, but what I'm basically looking for is a time where, okay, here we go. It's when the market is breaking support, but there's divergence at the same time. I'm going to draw this here for you. Okay, so right here, market's heading down. Maybe you're trying to find a way to get into that, and you found support right here. And you say, if it breaks that support, I want to sell. Well, hindsight here, it looks like it bounced and went against you. But you could have determined that before you even attempted to sell there and take the trade. Look down here and see what was happening. The indicator is moving up while price is moving down. If the market pushes through support, but the indicator does not follow, like it didn't here, that's a false breakout. So you can use this as an approach to filtering false breakouts as well. Let's see. Maybe that wasn't even the best example, but you guys should get the idea. Maybe we can find a couple more here. Here we go. Let's see. Let me draw. Okay, here's another one. Here's a really good example. There's your resistance. Some of you would have been looking to buy right there, right? So maybe your strategy is buying breakouts, and the market, it looks like it's heading up, and then quickly would have dropped and probably stopped you out, or you lost money. Well, you could have picked up on that by looking at the indicator and noticing that it's not breaking. It's not breaking that point over here. It's not breaking out with price. This thing should have been shooting way up here as price is breaking out. So when you see that, you know this is a false breakout. You might even want to sell, because that's what this is for. When this starts to head back down, right there, that's when you actually look to sell on the close of that bar. So if you know that's coming, you would not want to be a buyer on that breakout. Let's see. Oops, I keep moving my lines on accident. That's not good. I've got some trades open here, but I see. Looks like I just put some stops in. Got to be careful with that new build, the one-click trading, because you can accidentally drag a line and move your stop. Okay. So I think that everything else is good there. Anyways, let me show you. Let's see. Let's look at one more example with false breakouts and using the divergence indicator to pick up on those before it even happens. Let's see. This pair is probably not the best one to look at because it's a pretty good trending pair. That's why we like to use it with momentous. Let's go back to the pound dollar, like 1 hour. Okay, here's one right here. Here's the market making a lower low. So it's breaking short. You guys are right here wondering if it's going to break out. And get rid of that line there. And instead, the indicator is not breaking out. It's making a higher low, I mean. So instead of selling there, if you have a system telling you to short it, be careful because very likely it's going to bounce back up like it did. So if you make it late to these webinars, yes, these are recorded. And this one today is going to be maybe a little bit shorter than some of the others. But it is recorded, and we put it on the weekly page, where you sign up. Let me just can give you guys that link and show you that page, so you can refer back to it for watching the recording when it's put up. Okay, so it's just TradeWestForex.com/webinar/weekly. And I'll bring up that page, and I'll also post the link here and show you what it looks like. So watch replays here. There's the link, TradeWestForex.com/webinar/weekly. And if I scroll down on this page there, you can see the replay links just below where you register for the webinar. And you can see We've done more sessions before this. It was the 101, but we've changed things up now a bit, and so the things we're doing lately are a little different than before. So but you can still see there's 4 sessions recorded here. You can see we talked about automated EAs or robots. Did a couple sessions on that. Talked about the top 3 trading mistakes, and then last week it was all about mirror trading. So you can go in there and watch those replays, and also you can go to the blog. The blog is just tradewestforex.com/blog. And this is where I was telling you guys if you should be getting the emails where we post this information, but if not, here's the links as well. So there's that link, and you can see that. Show you the blog here. On the blog, it's just a quick summary, mostly of what we're going to be talking about in the webinar, like we did today. So there you go. Which technical indicators work best? And you can see the little summary, a couple links in there to different things, to momentous, that same link I gave you guys. You can scroll down. There's the all about mirror trading from last week. See the article there. And you know there's some different links in there for different mirror trading providers that we were talking about. Top 3 trading mistakes, searching for the Holy Grail, all this stuff. It's all there. You know, it's the weekend. You know, you guys can get in here and look at this stuff while the market's closed, read into it a bit. I think what you'll find too is I don't do things the same way as everybody else. I kind of have, you know, I don't just come in here and teach you about basic things that everybody knows about. I show you my spin that I put on things, or things that I've learned over the years, and I think that's why it's worth coming in here and reading these articles and watching these replays. So anyways, I'll take some questions if you guys have a few questions. We'll answer those, and then we'll get ready to wrap it up here. Okay, so I got one question about, is the 14 the best setting, 14 period? Like I was saying earlier, that's what I usually use. If you're looking for bigger swings, like from here to here, you're going to want to use a longer period. You know, I'm going to want to go in here and adjust this. Probably, I might go with like a 34, 40. You know, we could go to like bump it up to 30. And you can just kind of tweak it if that's what you're looking for, is the bigger swings. For me, I like to just switch the time frame at that point. But if you want to still to stay on the same time frame, you know, that works. You can see maybe that's not even a big enough period. Maybe go up, just try up to the 200. And that's actually, I don't got enough bars to go that far back. But mainly, I would probably just stick with the small number. And if you want the bigger swings, switch to a larger time frame. 14 is probably going to be the easiest to spot the setups on. Do you use currency strength indicators? I've played with them in the past. I haven't used them for a while lately. I mean, like I say, I really haven't found the need for a lot of stuff. I mean, even with momentous, I've already put the 200 into the system. The RSI is something I might look at, and then also the market structure high and low pattern, things like that. But I don't play with too many indicators. They just cause too much distraction, I think. Okay, let's see, another question. How important is money management? Money management is very important. We talked about that in the top 3 trading mistakes, and in a little bit in a couple of the sessions. You know, money management, I look at that as where you're putting your stop losses, how much you're risking on the trade, you know, your risk to reward ratios, lot sizes depending on all of that. That stuff's very important, because it doesn't matter if you're winning 90% of the time. If your risk to reward ratio is not very good, you could actually be losing money. Or your lot size is very important. If you don't know what you're doing there, you can end up getting margin calls. After making profits, you can give it all back from a margin call. Or you can just have a huge loss on your account. So yes, money management, very important. That's a key piece to momentous, PipStat, our PipStat program here. PipStat automatically manages those calculations with a click of a button. You hit buy or sell is all you have to do, and it figures out your stops, targets, and your money management part of the trade. I can show you guys that real quick if you'd like. Okay, so here's what PipStat looks like. And so what it's doing here is automatically determining the best stops and targets to use on your trades. So, rather than trying to figure out where you should put a stop, that's a very important part of your trading, because that's how you measure how many lots you can trade. You see, if I adjust this now, actually I just loaded this up. I might have to refresh it. Let's see here, 46. Okay, here we go. So as you can see, my lot size is changing smaller with the bigger stop, larger with the smaller stop. So that's what you should be doing as part of your money management, and this tool does it all. You don't have to even mess with these settings. It will automatically, based on your trading, it keeps an eye on everything for you. Before you take the trade, after and during, it calculates the best stops and targets for you, so that when you go to place the trade, it's already taken care of. You just hit buy or sell, and it has the lot size and all of that figured out. And I guess I could post you guys this link. We do have a way you can try this out too, and you could start playing with some of these tools. Let me get you guys that link. Hang on a second. So what you could do, actually, the easiest way probably to get to it, I'll post you the direct link as well, but if you don't have this link and you wanted to do it later, if you just go to the blog, we have a blog posting here where we did talk about money management and PipStat, and that would be right here. It's in the Poor Money Management, number 3. There's the link to PipStat right there. And if I click that, you guys can, I'll copy this link over here for you. You guys can see everything about it and even try it out. We got a little trial option for $1, and you can cancel after that if you don't like it. So let me pop that link in there for you guys. Okay. So that's Bill. You might want to check that out. You're the one that mentioned how important is money management. So anyways, guys, any other questions now before we close things up? Okay. If you're using momentous on an hourly chart, there should be a lot of opportunities to trade. And what you might do is just you can open up any currency pair and find plenty of opportunities. And so you might want to do that if you're looking for more opportunities. Someone was asking about contacting us. The best way to get in touch with us, if you have questions about anything, is using our live chat right on the website. It's on the bottom right corner of any of our web pages. So if I go, if I even go to like our let's see, if I just go to our home page, let's see here. Okay, if you go to our home page, you'll see that it's actually right there on the bottom right corner. So it just says chat with us. You can click that, and Even if we're not online, it will send us an email and we'll respond to you. But this is the best way to get in touch with us. So you can see that in our members area, you can see it on any of our web pages, and that's how you can reach us. Yeah, most of everything we do, we try to trade is a mechanical type of approach. At least like with with Momentix, the tool's all there, the rules are there, and the targets are there. The thing is, it's not purely mechanical though. We have 4 different targets on the full version that we teach. We have some coaching that we do, teach you how to decide the best ones to close it out at, and some ways of doing some filtering and different things. So it's not purely mechanical. I always believe in applying a little of your own analysis and things that I can teach you to help smooth things out even more. Okay, well, I'm going to probably close things up here. I think I hope you guys enjoyed this quick little session. I guess it was almost an hour, but we talked about some things that I know can help you if you use them with your trading, especially trading with the trend, using the RSI indicator to find false breakouts, and as also a way of finding the market changing direction. We talked about Momentix, a strategy that uses this approach and you can use with it, and how to use it with your own strategies. So, and a little bit about money management. But if you want to see more about that, watch one of our replays. I've given you guys the links to that, and you can just go to the blog at tradewestforex.com/blog and find all this information. So thanks everybody for coming today. I hope you have a great weekend, and we will see you in next week's session.